What's up, everyone? My name is Ale. Welcome back to my world of stocks. So I'm actually recording this on Halloween, but unfortunately, I'm not going to be able to post it until the following day. But I do just want to wish you guys, I want to say that I hope you guys had a happy Halloween. And in light of that, I was actually going to try to do like a spooky-ish type of video. And I know there's not a lot of spooky stuff in the stock market investing world. But the idea I had was to maybe talk about all of the speculative high risk stocks that I own in my portfolio, just because maybe you can associate high risk with some kind of scary spookiness anyway, it's a dumb little idea that I had, but that's what we're going to be talking about in today's video, all the high risk speculative stocks that I own. Now, there's really a lot of different ways that we could categorize high risk or speculative stocks, but just to keep the video a little bit simpler, we're going to focus on companies in my portfolio that struggle with profitability, maybe some younger companies, maybe some higher valuation stocks, more growth oriented type of companies, things like that. And we've actually got a total of 7 stocks to go through. I know I own way too many spec stocks, but when you really look at it, I limit the speculative, the really kind of hardcore speculative stocks in my portfolio to less than 10%. So all of them put together make up less than 10% of my portfolio, and that's really a good balance for me. I feel like I'm not overly exposed to them, but I still get to dip my toes into some higher growth kind of speculative stocks that interest me, and then as they mature, maybe I turn them into larger positions over time. But anyway, that's what we're going to be doing in today's video. I'm going to count down from the smallest ones to the larger positions, so from 7 down to 1, and I'm going to let you know a couple reasons why I own these stocks. Of course, I'll let you know if I plan to buy more or just hold them or maybe even sell some of them at today's prices, and I'll let you know if I'm either up or down as a percentage on each one of those stocks. And just to throw in a little bit of a bonus at the end of the video, I'm also going to kind of rank them from best to worst at the very end of the video in terms of which ones I like the most and which ones I like the least. But I hope you guys stick around for the whole video because it's going to be a lot of fun. We'll kind of do a rapid fire. We'll run through these quickly, and hit the like button if you guys do enjoy this, and let me know down below what are some spec stocks that you guys like, and maybe I can make a video in the future on some speculative stocks that my viewers like to invest in or are interested in. But anyway, with that said, let's go ahead and jump straight into this list. Okay, so kicking things off here with stock number 7, that's going to be the mobile gaming company Zynga, ticker symbol ZNGA, at less than 1% of my portfolio. And this is actually one that I am pretty excited about long term, just because mobile gaming is really driving all of the growth in the gaming market at over $70 billion, and it's expected to skyrocket to over $150 billion by 2027. And that's really where Zynga specializes, although they're also making a Star Wars game for the Nintendo Switch. That's really a hybrid console, so they're even doing some kind of console stuff too. But either way, Zynga has numerous licensing deals and really popular games that have led to them raking in huge revenue growth of around 50% a year. That's very solid. Now, the only con with Zynga is that they sometimes struggle with profitability as they're still a relatively young and growing company, and coming off of the pepperoni lockdowns, the mobile gaming market is expected to take a little bit of a hit as people are less glued to their phones and actually start going outside and getting some fresh air. But long term, I do think that there's still a ton of potential here, and Zynga is a company that I look forward to owning. The stock has taken a beating over the past year for the reasons that I just mentioned, but now that it's trading at the very bottom of its 52-week range, I think it's well within buying territory. I'm actually down about 2% myself at the time of this video, but I intend to keep buying this one the more that it falls. Alright, now moving on to stock number 6, that's going to be Endeavor, ticker symbol EDR, at about 1% of my portfolio. And I'll just keep this very simple. You guys already know this. Literally the only reason I really own Endeavor is because they are the parent company of the UFC, which I personally feel that the UFC will one day become as large and as profitable as the other major sports leagues in America, like, the NBA, the MLB, the NFL, and so on. Unfortunately, the global health issue hit Endeavor's covers various businesses really hard, especially their large crowd events, and that sent both their sales and their net income really plummeting last year, which made for a very volatile stock after IPOing a few months ago. But I felt that all of those dips were great buying opportunities, and I am now currently up by over 10% on my position thanks to those purchases. Not sure if I'll be buying any more at this time since I am already up by a double digit percentage, and the economy also doesn't look so great, so I'm not sure that right now is a great environment for chasing such speculative stocks, but I am definitely still planning to hold them very long term. And the good news is that we at least are starting to see a recovery here in their business, with 38% revenue growth expected this year, along with EPS growth of 85%, which should help them get right back into that profitability area and really make the stock a bit less speculative. Okay, now moving on to spec stock number 5. That's going to be one that I'm very excited about long term, and that is Robinhood, ticker symbol HOOD, at just a bit above 1% of my portfolio. But I really hope to one day turn this into a much larger position because I'm very bullish about their future. Now, personally, I see Robinhood as becoming the future of investing, especially among younger generations that will grow old having always kind of used it. And that's just a business model that I really like. You always want to see a company that can attract a large user base and continuously fill it up with more and more young people as they enter the market. This year, they're on track to easily more than double their users from last year and have already surpassed over 22 million by the second quarter. Now, more importantly, the average age of those users is only 31 years old. Most other brokers out there, they're like a decade or more older, so that's a big deal. And half of the users of Robinhood have never even purchased stocks before, meaning that it's becoming a big trend among young people to start investing with Robinhood. It's become very trendy because of how accessible and how easy to use the Robinhood platform is. Now, meanwhile, the stock has been all over the place, IPOing at $38 a few months ago, then skyrocketing to $85 before crashing all the way back down to even a lower price than the IPO at just $34 today. I think this is a fantastic price right now for the long term, and I'm going to be loading up on more shares in the coming weeks and months if it continues to fall. Oh, and by the way, I'm currently down about 5% myself, so all the extra buying should help me lower that cost basis, which is one of my most favorite things to do with stocks. You guys know that I really love to buy stocks as they go down. The further they fall, the more excited I get on those. All right, now that brings us to stock number 4, and that's going to be Duolingo. Ticker symbol is DUOL at just over 1% of my portfolio. And this one is a market leader with their language learning app that teaches you a new language in a fun and more affordable way than something like traditional college classes. And even just this direct-to-consumer market alone is expected to be worth over $100 billion by 2025, which is like 700 times larger than what Duolingo did in sales in all of last year. That's a huge, it's giant market for them. So just that alone, I think, is reason enough to be bullish on Duolingo. But they're even expanding into other areas of online learning too, like math and science and more. And I just think they have a very real shot of leading in some of these online education markets, which is where I do feel that the overall education market is heading long term, because it's just a lot easier to do like remote learning. It's more convenient for people. I just really think it's heading online. Now, having said that, they are a younger company that is not currently profitable. I don't really expect them to be profitable anytime soon, but with revenue growth of sometimes in the triple digit percentages, I am more than willing to make a bet on Duolingo. Only problem is that the stock is very expensive, trading at over 30 times sales. It's often extremely volatile, and I'm already up by over 30% on my position. So considering all of that, as well as the fact that the market will likely become much more saturated with competition over time, I'd rather just hold on to my position for now and wait to see how they perform longer term as the market matures before I go in and buy any heavier on this one. Okay, we are now breaking into the top 3, and coming in at number 3, that's going to be Spotify, ticker symbol SPOT, at over 1% of my portfolio. Now, I really bought this one just to have some exposure to the future of music streaming, as well as a potential competitor to YouTube, since they're now doing video podcasts like the Joe Rogan Experience and more, some of which are actually exclusive to the platform. And these are gigantic markets that we're talking about here. I mean, there's estimates of like $75 billion billion just for music streaming in around 5 years, and over 11 billion just for podcasts alone today. So very likely we're talking here over $100 billion combined for the market when it's all said and done. And yet Spotify only did less than 10 billion last year. So considering that they are the market leader, there should be plenty of room for growth there for them. And that's exactly what we've been seeing at over 20% growth a year. Yeah, it might not be as exciting as maybe some other high flyers, but it's decent growth nonetheless. Still, I do feel that there's a lot of things to be worried about, or at least concerned about when it comes to Spotify stock. And for me, that would be the extremely heavy competition from gigantic behemoths like Google and Apple and even Amazon. On top of which, Spotify consistently loses money every year because the cost for licensing content is so high. So just because of those reasons, I mean, it's going to be really hard for them to compete. And to compete, you have to have exclusivity. It's just a really, really rough market to be in. And for those reasons, I do feel like this is probably my least favorite spec stock that I own in my entire portfolio. It's probably my least favorite of any stock I own in my portfolio. And I really wouldn't be opposed to selling out of it in the near future, but I mostly just kind of picked it up because it had crashed by so much when I purchased it. And as a result, I am already up by over 30% on my position. So while I don't necessarily plan to sell it quite yet, if it was to climb up to like 50% or even more, yeah, you're definitely going to see me do an update video where I'll be letting you guys know that I actually cashed in my profits on Spotify. It's one that I'm just I'm kind of in the middle on this one. Don't really feel really bearish, but I also don't really feel that bullish either. I'm just kind of in the middle with it, and I'll be willing to cash in profits if I ever feel like it. Okay, now moving on to stock number 2. That's going to be one of my absolute favorite new pickups this year. Complete opposite to Spotify because I'm very excited about this one. And that is Palantir, ticker symbol PLTR, at about 2% of my portfolio. And this is a pretty controversial stock, I'll be honest here. Some people love it, some people hate it, and it's not always necessarily because of the stock itself. A lot of times, it's just because they work so closely with the government on things like special surveillance and all kinds of different military contracts, things like that. But just from an unbiased, purely investing perspective, I personally feel that government surveillance is only going to increase over time. And while I, of course, hate and really disagree with anything that would give the government more power and more control over us regular people, I just think that it's an inevitable future that we're heading towards. And I really feel like Palantir may be one of the best ways to bet on that future within the stock market. Now, speaking of which, the stock itself tends to be very volatile, as they're up by over 180% from their IPO of last year, but they're still down over 40% from their highs and currently sit in the bottom half of their 52-week range. Now, I personally think that long term, this will be a great stock to own. So even though I'm already up by over 13% on my position, I'll still be looking for any little dips where I can get them because I really want to turn this one into one of my largest stocks over time as they deal with their profitability issues and become more stable. And especially if they become so heavily integrated into the US government to the point where competition becomes less of a worry and Palantir just becomes too valuable to the United States where they just can't really let them go under because they're so heavily relied on. By the way, I wouldn't really worry at all about the profitability. Sales are soaring with new contracts being announced all the time. And once they become more heavily integrated as what they refer to as, they always kind of say that they want to be known as like the operating system of the US government. Well, once that happens, you're likely going to see those profits skyrocket with something close to like software like margins, which tend to be very, profitable. So it's only a waiting game in my opinion, but I would say Palantir, it's one of the stocks that I really do like, especially as a smaller spec stock. All right, that now leaves us with the final stock of the list. At number 1, my largest speculative stock in my portfolio at the moment, and that is Teladoc Health, ticker symbol TDOC, or I always just say TDOC, at around 2% of my portfolio. Now, the reason I own this one is because they are the leader in remote healthcare, which I believe will be a massive market in the future. It's really where I see the most growth in healthcare coming from, just because it's so convenient to be able to see your doctor without having to leave your home. Not to mention that it's even safer too, which by the way is the reason why their sales skyrocketed in 2020, as you would expect. soared by almost 100% because of the global health issue, where people were trying to stay more at home. And even here in 2021, they're still expected to soar by another 85% on top of that. So this is growth that it's just enormous growth, no matter how you look at it. Now, I do, however, think of Teladoc as a speculative stock, mostly because of their lack of profitability, which got even worse in 2020 despite the huge revenue growth, as well as the stock typically being very volatile, which all you really have to do is look at their 5-year chart and see that they are up by over 800% despite a recent crash that sent them plummeting by over 50%. But overall, I still think this is a very good gamble for me. Profitability issues, I mean, they've been making acquisitions, they've been making moves. You're gonna it's gonna take time until they really start to rake in profits. And even though I'm currently up by over 17% on my position, I will very likely be holding on to this one for many years into the future, and also buying more if any dips do arise. And even here, I still think that it's trading at a great price today. Anyway, that does it for today's video. Now, if I was to rank these from best to worst in terms of which ones do I like the most down to the least, or which stocks would I like to really keep in my portfolio at today's prices and hold them long term, well, ranking them from most interested, or the ones that I like the most to the least, I would probably go Palantir at number 1. It's really a solid stock that I really believe in long term. Number 2, I would go with Robinhood, another one that I really want to have in my portfolio. Number 3, I would go Teladoc. Still, those top 3 right there, Palantir, Robinhood, Teladoc, those are 3 solid ones that I really want to continue to own long term. Then number 4, I'd probably go Endeavor. Just UFC exposure, but a little bit riskier in my opinion. Number 5, I'd probably go Duolingo. Another one kind of similar to Endeavor. I do really like them, but maybe a little bit more speculative, a little more risky, just for me personally. And then number 6, I would go with Zynga. Zynga is a mobile gaming company. I really like them, but still need to kind of prove themselves a little bit more, and the market is very competitive, so I do rank them a little bit lower than some of the others. And then number 7, Spotify. I'm already up a decent amount on Spotify. A ton of competition in that market. I'm actually thinking about cashing in profits there, so Spotify definitely goes to the bottom of that list. But anyway, let me know if you guys agree with that little ranking. Let me know what you guys think about all the spec stocks that I own. Do you like any of them? Do you hate any of them? And what are some that you guys like? Let me know, because I will actually come back to this video and I'll pick some of the ones that you guys mentioned, and I'll do a video on spec stocks that my viewers are either invested in or are interested in, and then I'll give you my thoughts on each of those, and that would be a really fun video too. So anyway, hope you guys enjoyed the video. Make sure you hit the like button if you did enjoy it. Subscribe. We've got more videos coming up this week, and can't wait to see you guys again here soon, and I'll be down there in the comments section responding to comments too. So anyway, thank you guys. I'll see you in the next one. Take care. Bye-bye.